Everyone, Double P here and welcome. So I'm just going to go over the quick state of the market and how to actually do some fairly fairly decent trading. Members always asking me all the time, what kind of pockets do I look at when I'm looking at trading? Well, I'm very simple when it comes to that because there's two states of the market. Stocks are either in an accumulation stage or they're in a distribution stage. And yes, they can do stay stay range bound and stay flat. So I like to go after the accumulation stage or the distribution stage. So the markets right now, it's very top heavy. It's been top heavy for the last 2 months. But let's go intraday here. So because I have a few members that are always asking me, so we're on a 1 day, 5 minute chart. This is the windows that I like to go after. Either, so let me map this out for you because this is all algorithmic and this is all I really care about. The market's either in two stages. It's either a distribution stage or it's an accumulation stage. This right here is the distribution stage, and you can see it with the money flow. Money flow never lies. People do, right? There's your distribution. That's millions and millions and millions of institutional hedge fund dumping order flow. So I look at that and I say to myself, I'm going to trade that. Why would I leave that alone? There's three things. I like to keep my charts actually fairly simple because at the end of the day, it's all algorithm. So well, that's all I care about. So what do I use? Well, I use accumulation distribution because this doesn't lie. It never lies. It cannot lie. It's telling you the state of what institutions and hedge funds and the smart money is doing. Then I use volume profile. Volume profile is deadly accurate. It's literally showing you what's the acceptable amount of trading volume um, that institutions and hedge funds are really playing into, right? So you got your value add high, you got your value add low, you got your point of control, and you can see where the pockets are for volume. And this green line here is that's the expected move for the week for Tesla for this week that just passed. And you can see how it's a magnet. Uh, Tesla blew through it and then came right back down to it. Right, so you can look at that as support and resistance. So I trade the distribution, and then you know, right here on the low, let me uh, let me fix this up for you so it's properly done. There's your move on the upside. So it's either one or the other, right? And it's clean. That's the kind of moves that you want. This is algorithm. This is not retail. This is algorithm that's sitting there and it's making the moves for you. So if you can understand 100% order flow, if you can understand 100% order flow, then you'll know exactly how to trade. So my members are always asking me, this how you trade. This is how I trade every single day. It's order flow, right? So I like to be either on the inside of the day or the last 45 minutes to the last hour of the day, either or, because you can see exactly what algorithms are doing. Let's come over down here and see what AMD is doing. So you can see right away, where should you trade? Well, the algorithms are telling you exactly where to trade. You can trade at the end of the day, or you can trade at the beginning of the day. Very profitable. Now, of course, if you're a position trader or a day trader, You're going to get days like this where you're going to have a walk down day, but the biggest move by far is right there. And then you're going to have, of course, you're going to have a lot of, you're going to have a lot of time to just sit there in a range. And we never like to trade in a range. So now in this range here, you're either going to wait because you see the range forming in real time. You're either going to have a breakout or you're going to have a breakdown. This is the death zone. We don't trade this, right? The only reason or the only time we trade this is if we see a big Maribozo candle, either bullish or bearish. So let me just clean that up there for you. That's the only time you're going to get in is when you see that range there. This is the Maribozo. So that's when you say to yourself, all right, I'm going to get in there. And then that's your move. Let me remove that right there. And then you see another range off of the low, which is right here. So that's your low. This is low level consolidation. That's low level consolidation to the high. This is once again, this is the death zone. We don't trade that box. That's a volatility box. So what this does is price action, volume, and volatility is building like a coil, like a snake, and it's building inside of that box. And there's either one or two things are going to happen over time. You're going to get a breakout or you're going to get a breakdown, right? And then what do? You see your money flow right down here at institutions. This is how you get carped alive because now this is just carping. So the algorithms are just going back and forth, back and forth, back and forth, making their money, but they're not really doing anything. And that's how you get carped alive because if you want to sit there and trade this, you're going to get screwed because you're going to have to go up and down, up and down, up and down, up and down. Why would you take all those trades? That's like literally you're getting chewed up with commission fees and you're getting carped alive and chewed up by the algorithms. You want to wait. There's your volatility box. You want to sit there and you want to wait for that breakout or that breakdown. Where do you trade? Well, as soon as it breaks out of that volatility box, right there, boom, that's where you're taking the trade towards the end of the day. The last hour and a half, the last 2 hours of the market, especially the last 45 minutes of the market, which is roughly right around here, that's where you want to go. That's where you want to trade. Now, if you're wondering, well, what's this? Well, this is my 200 and this is my 20. Stocks breathe. So they have a narrow state, they have a wide state, then they come back to the narrow state, and they come back to the wide state. This is a wide state between the 200 and the 20. That's a wide state. Stocks always come back to a narrow state after leaving a wide state. This is called expansion and contraction. Stocks breathe, they expand, and then they contract. This is what algorithms do. This is called the ARIMA model. So it's autoregressive integrated moving averages as well. So once you understand all of this, you put it all together, and then that's your trade box. That's your trade window, one or the other. And then when you apply options to it, you can see the money flow here. It just went parabolic. You're trying to short that, you're going to get crushed, right? That's AMD. I mean, I could go through this on and on and on. This is Google, what I traded today and I sent out to the members. Our box was right here. Fantastic box to short. get into a short position and just crush it, right? Hit it once, hit it twice, 3 times, 4 times, and then you're off to the races, right? Makes a rip right there, and then the whole entire rest of the marketplace, what did Google just do, right? And I'll do this properly for you so that you can see what algorithms are doing. There's your range. Let me edit the properties there for you. Let me activate that drawing. So right there, I mean, once again, you're going to get carped alive. This is the volatility box. All that's volatility. You don't want to trade that. You want to sit and wait. And what do you wait for? Well, this is what you wait for. That move right there. Right? What do we have here? The last hour and a half, the last 45 minutes of the market of the market open, right? There's your move. You know it's going to break because here's your 20 and there's your 200, and this is in a very narrow state, and you know it's going to break from a narrow state to a wide state, and that just opens up. There's your move right there. This is your signal. This is a doji, and it's a bearish doji. So that means there's a signal regime. That means there's a change coming to the downside because it's bearish. It's the candle of indecision, but it's a bearish candle. You sit down there and you take that big move from 382 all the way down to 387. That's a big boy move on Google. You know, Google is what? 380, 380.34. So that's a move that you just take and you clean up, right? I mean, I could go through this on and on and on. Oracle, I mean, you get the point. All right, there's your volume. There's your move right there from start to beginning, from start to end. Oracle was just on a run all day long, right? That's 10% move on Oracle, 22 bucks. That's a big boy move on Oracle. It's a $225 product. So this is a move where you just sit there. I mean, you want to get flagpole-ish. I guess you can call that a flagpole, and then you're off to the races, right? What do I want to do? Do I want to draw a channel on that? Yeah, because algorithms trade in channels and slopes all the time. Everything is a channel, everything is a slope. That's what they're trading. And what I'll do here is I'll actually tighten it up for you so that you can see it. There's your channel. You can see right here, once it breaks outside of that channel, it goes under here. That's either telling you, okay, well, it's time to get out of the trade because it broke that channel, which is what you should be doing. You can see it right there. So it broke that channel, right? Right there, it broke that channel. So you get out of the trade. But you can see right here, the 20 is moving and lifting it. So this is literally the last hour, hour and a half, right? 45 minutes of the market. There's your big move right there. You know you've been bullish all day long. Once it breaks that channel, you get out of the trade and say to yourself, all right, well, I don't want to lose any money. And you can always hop back into that trade because it's telling you exactly where to go, where to get right into that trade, which is right here. You've got the point of control, right? The POC is the point of control. That's where all the volume is. That's where all institutions, hedge funds have found fair market value, and they say, okay, that's what we're going to do. We're going to trade right there until we get another pop. And then that's your pop. right on the point of control, fair market value, right there. And you're off to the races. You can do this in real time. You just gotta look. You just gotta map everything out. So let me remove that. I mean, it doesn't really matter. You can do it on I can do it on any position to show you what you need to do. Now, that being said, when I'm using the PPOT-Analytics AI engine, this is finding it all for me. So this is the equity tab right here. Out of thousands and thousands and thousands of positions, thousands of equity products, which was Friday, May 29th that I'm cutting this. Well, I'm actually cutting it on the weekend, so this is for yesterday. Out of thousands and thousands and thousands of equity products out there, the PPOT Analytics AI Engine caught 100 that are worth you looking at. And you can see right here, NVAX, there was a gap and go, bullish. That's something that you want to look at. Then you got Sun, that was a gap and go, that was bullish as well. So we can go have a look at both of these. NVAX. So we'll go NVAX first. We'll have a look at it. NVAX. And you can see the monster move on NVAX. No, now usually what I do with these under $10, under $15 stocks is I kind of want to leave them alone because they're a little bit erratic. But when they do get into a gamma squeeze, they can definitely move on a gamma squeeze. But I tend to stay away from these type of stocks because you do have a bunch of retail that's kind of erratic, but if you can look at it, the methodology is still the same. This is an algorithmic move. This is an algorithmic channel. So you're pretty much safe. You're pretty much safe in this particular channel. There's your box. So you're pretty much safe to do some stuff inside of that box because you can see here it's very orderly. So let me remove the box here. Actually, let me draw the box. So this is pretty orderly. So you've got your move right here off of the low. It broke outside of the box. Then you've got move two. This is all algorithmic, by the way. This is not me making it up. This is just stair stepping. This is algorithmic stair stepping. And you see the move right there. So let me get rid of all these boxes. So remove that, and remove that. And then what's your second line of defense? Well, the second line of defense is the 20 because positions, stocks, volume hugs around the moving averages. The tighter it hugs around that moving average, the tighter that you can stay in that trade. So what's the 20 doing? It's going up all day long. So it's telling you, well, just ride me. Stay in the trade and ride me. There's your 200. We had a narrow state right here, then it went to a wide state, and the 20 is dominant because it's above the 200, right? You can see it right there. The 20 is above the 200. So the 20 is the dominant stage, the dominant moving average, and the price action and the volume is hugging the 20. And then, I mean, you want further verification. There's your institutions, right? There's your money flow. Institutions are participating in this because that's what money flow is, right? You can see it right there. So, but with the PPOT Analytics AI engine, that's kind of how I trade. I let the market come to me. I don't force anything. I don't want to force anything. I want to make sure that I look at what the engine is telling me. So that's the equity tab. That's for, and then we come over here to the prints tab. And the prints tab, literally, this is like I said, this is the holy grail of how I've built this whole entire engine out. this is one of the things that you really need to look at. This is after hours, by the way, but this has been score after score after score. This is how the members make their money. This is big monster money. You can see it right here. It's a hedge fund order. It tells you exactly what's going on. This is the hedge fund order. It's the hedge fund's puke and getting out of a position, the IWM. These are big prints, right? And then you got your block trades right here. This is in a gamma squeeze. So it's literally telling you what's going on in the marketplace. And you can see it right here, right? The AI engine, the Analytics AI engine is telling you exactly how to trade this thing, right? You can see everything right there. You don't have to think. I no longer really have to think about stuff, right? I look at what the engine's telling me and I follow what the engine's telling me. And by the way, it's all in real time. Look at that monster move on Oracle. And yeah, I traded Oracle yesterday as well as Google. All right, there you go. Way more than 10%. It actually traded around 15%. Then it came right back down to 10%. And this is a monster move on Oracle. Huge. 208 to 226. Monster move, right? I mean, how much money do you think you would have made following the PPOT Analytics AI engine, following exactly, it's telling you exactly what to do, how to trade this thing, intraday trade, getting in at real time with the institutions and getting on the right side before the institutions, as the institutions and hedge funds and smart money is taking care of this trade. I mean, how much money do you think you would have made? I mean, yeah, I did very well yesterday, right? Trading Oracle and Google. So I want to show you the power of the PPOT analytics engine. This is it, you know. And then we have our then we have our alerts up here. So this is all set up specifically to show you exactly what you need to do. This is telling you what's going on in the marketplace in real time, what's happened, where you want to be, where you want to be positioned, how you want to position yourself. That's it, right? This engine is very, very, very advanced. And the scanner is closed because it's the weekend. But come Monday morning, I'm going to show you some stuff again, and I'm going to show you how powerful this engine is. So if you're looking at what's the state of the market, the state of the market is right here with the PPOT Analytics AI engine, and how I look at trading it. Let me see here. So let me come back over here. So that's it. That's what you want to do. Now, if you want to go old school, well, I'm literally telling you what you need to look at. The institutional flow, accumulation distribution. Let me get rid of that there. Let me pop that out because I don't need that. So volume profile, accumulation distribution, your 200 and your 20, and that's it. You're going to know exactly what the state of the market is. Do I look at this? From time to time, I look at it, just before I look at the PPOT analytics engine, I kind of just pop over here real quick and I say to myself, yep, everything aligns up. This is all real time. This is happening. And this tells me this is actually this is actually the last thing I look at because this is like slow. The PPOT Analytics AI engine, that stuff is telling you like get in. Like now it's happening. Now the move is being made, right? Right there. So again, this is what it's all about. This is something that you definitely want to get your hands on. This is the PPOT Analytics AI engine. It's very advanced. Yes, this has been 5 years in the making to trying to create this. finally got it done. And I like you to get it into your hands so that you can look at it and take advantage of it, take full advantage of it. All right. So that being said, my name is Double P. I'll see you guys in the next trading session. Take care, everybody.